Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning pre-market webcast. Okay, first things first, we are now in the March contract for the futures. So we are rolling from December into March. So if you're new to this and you hear somebody say the word roll, that's all it means. It's an administrative function. Back in the day, there would be people that would trade the spread between December and March. I don't think there's a whole lot of them left, just like there aren't a whole lot of people left in the actual pit in Chicago. So I'm sure they're still out there, but it doesn't, in my opinion, it doesn't lead to the shenanigans and some of the other stuff that you would see in past years. Although yesterday's move from 41 back to 32 was a little odd. What we've seen in the last day to day and a half is we've seen the bulls take control of the tape again. We made this low on Wednesday, 26.20. Yesterday, they did 26.75 or 26.25 rather, right out of the gate. They came in and bought that dip. The weekly pivot in the December contract is 32.58. You can see here you had matching lows at the weekly pivot. This move back to retest it really kind of confirmed it, and we've marched up ever since. I'm flat right now. I got chopped up a little bit in the last hour yesterday. We had a really nice long up until they pulled this back a little bit, so we got profits and we got taken out there, and then we got chopped up a little. I don't like trading ahead of jobs, and I had no intention of being in anything until after 8:30. We don't game jobs, and gaming jobs is this: you walk in and you say, well, I think the reaction is going to be higher, or I think the reaction is going to be lower. What's that based upon? Well, nothing. What I read in Barron's. And typically when you're right, you'll take it off for a little bit. You'll pat yourself on the back. You'll tell all your trader friends how smart you are. But if you're wrong, you'll hold on to it for dear life because it's a trade that's based upon your personal opinion, not based upon anything that's happening with regard to price, risk, anything else. And you're going to want to be proven right. Usually in the process of trying to be proven right, you lose an ungodly number of handles, especially if the reaction is big. Now, that said, the last few jobs reports have been pretty muted reaction-wise. I mean, even the one where it went negative because of, hurricanes or seasonal or whatever they want to call it, the reaction to that one wasn't even all that big of a deal. Not the way that it was a few years ago where we've moved 10, 15 handles, one Friday a month. So I'll be interested to see if this particular jobs report really kind of fuels things, or whether the market just kind of shrugs its shoulders and moves on, which is what it's been doing. The action the last few days has been much more two-sided. You can see it here on the hourly chart. You got an all-time high on Monday, 65.25. We pulled back, and the issue now is, are we doing a lower high or a higher high? Bears need a lower high, and then they need a lower low. The bulls, they need to make a new all-time high. That's the position that they're in constantly now. They have to make a new all-time high, or you're going to see, another pullback. And that's all this really has been, right? It's just an orderly pullback. I mean, if you widen out, you get to Friday, and, the little news-based move down that was rejected. We go and do all-time highs, but this was pretty orderly. And this has been pretty orderly as well. So now the battle is up here. Lower high, higher high. What's it going to be? All right, everybody have a fantastic day. Have a fantastic weekend. It's been a great week. It's been a fantastic week trading-wise. It's been a fantastic week for us. I'm not going to do a ton today. I don't like trading the roll. It's one of my least 4 favorite days, a year to trade. So unless this really sets up well for us, I'm probably not going to do a whole heck of a lot today. Keep what we have. We've done the week almost a few times over because it's been some really great action tape-wise. But if this doesn't set up nicely, and set up nicely means some lower highs that we can wrap our head around with regard to risk, or some higher lows where we can wrap our head around to risk, then we're probably not going to do a whole heck of a lot today. I'll be interested to see if the hourly mid-band here in the 43s holds on any kind of a jobs reaction down, and then if it progresses higher, gets above R2, then they can go ahead and squeeze the bears on a Friday. All right, take care. I'll be out with a wrap-up later. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.